Crypto doesn't understand TradFi scale, which is part of the reason why I think people are just way off base in terms of where we're at in the cycle. $1 billion is basically nothing in TradFi.
Is this a bubble, in your opinion?
Yes, I think so. And I say that really cautiously. I think it is likely, there's likely some overvaluation because everyone is really excited about something. I think tokenization is much further off than people think, and the infrastructure to actually support it is not ready. Nowhere near ready for prime time. What happens when those governments are less stable? What happens when the US and China aren't getting along, but they still want to do business with each other because we still want to buy something from them and they still want to buy something from us? And you're seeing that already. Bitcoin is uniquely positioned for that world.
Cause we pop them like overheated vodka. C3, okay, a millionaire. I'm a young money millionaire.
Welcome back to the Daily Stack. My next guest helped invent an entire category of modern finance. She found a single overlooked pathway buried inside European securities laws and used it to launch the first crypto exchange traded products anywhere. That company, of course, became 21 Shares. She and her co-founder built it from zero to more than $11 billion in assets across 55 listed products in roughly just 8 years. Last sold to FalconX in what many call the largest exit by a female founder in crypto. The systems thinker, a self-described history nerd, and one of the sharpest voices writing today on the entire market. You got to check out her Substack, Ophelia Officially. I just read a few of them and I absolutely love it. So Ophelia, welcome to the Daily Stack.
Thank you so much for having me.
So before we get into the big stuff, what is life for a founder like after your big exit?
Life for a founder post-exit is interesting. First, there's a very long nap. And it was the first thing I did was sleep, because you do sprint for 8 years and exhausting. And one of the really nice things has been the opportunity to actually take a step back and look at the industry and look at the market more holistically. And it's something I've been spending a lot of time doing. And it's actually why I started writing this Substack, is because it's been a fascinating chance to kind of zoom out from being so focused on crypto ETFs, on market dynamics around crypto ETFs, to actually be able to look at the market holistically. It's such an exciting time for crypto.
Yeah. And I've been in the space since 2017. I thought it was Beanie Babies at first. My dad still calls it Beanie Babies, even though 120,000, he still called it a Beanie Baby. But let's go back to like 2018. What do you think Wall Street missed, and how much of building 21 Shares came down to genuine insights versus simply outlasting every bank and regulator who told you no?
So it's funny. We built 21 Shares in large part because of me and my co-founder's moms. And your dad might think crypto is Beanie Babies, but my mom is actually the person who introduced me to Bitcoin back in 2013. And she is incredible in that she completely understood crypto. She's like, Merck spends too much money hedging. We are in a geopolitical anomaly where everyone is getting along, but globalization is here to stay. We're going to need neutral rails and a neutral means of exchange. Have you heard of a thing called Bitcoin? Like, no. But what's really interesting is that's still what we're talking about today, 13 years later. The weird part was that despite the fact that my mom could completely understand the whole point, right? Like, that is the whole point. She couldn't invest in Bitcoin. She wanted to be able to do it with her existing infrastructure, with her existing banker brokerage, have it fit in her existing estate planning and her tax accounting. And there was just no way to do that at the time. You had to open basically a new bank account just to be able to make one investment. And that wasn't a realistic ask. And my co-founder, similar set of issues. And so a few years later, we were looking for an investment product for them to say, okay, well, wait a second, they want to buy some crypto. Like, there's got to be a way to do this that fits in their infrastructure. And it just turned out there wasn't. So then we're like, okay, cool. Well, there's no way for us to recommend a product to them. So let's just go make one. How hard can this be? So we went and talked to 27 different regulators across the world to find the right place to launch these products. And it turned out that was Switzerland. So then we moved there and started working on building these products and ultimately building 21 Shares. So it actually came about in a really interesting way. At the time, it was considered absolutely insane what we were trying to do. Nobody built startups outside of America, really. Like, that was already very contrarian. There was some trying to make Bitcoin ETFs happen, but they were trying to make them happen in the United States. They weren't trying to make them happen abroad. And that was considered relatively contrarian because, the US are the largest capital markets in the world. It's going to be all about America, and America is going to come online any day now. And it's like, well, I don't think so. We should try and do this somewhere else. Like, it always seemed a little odd to me that there was so much focus on the US. And so that's something, that's really what it came down to, is like a willingness to be a little bit contrarian and actually take a bet on something, and genuine need for the product.
Can you walk me through the early days, right? Like I'm a founder. Our company, not intentionally, but our main company is 21 Rates, which is focusing on the financialization of Bitcoin. So this is a great conversation to have. The whole point was I was looking at different lenders, and every single website I went to said they're the most trustworthy. They're the best, the lowest rates, right? And so I wanted to have a nerd wallet type, third party that would started with rates. So that's why, it's lending. But now we've gone across multiple different categories as more and more categories, pop up. We see real estate now. We're seeing obviously lending, yield products, credit cards, the ETFs, as you mentioned, right? Where do you think America stands today in terms of like the timeline of where we will get to, right? Like we've had the Genius Act happen. Clarity Act's had some bumps along the road. And like you mentioned, in your awesome Substack, AI is the attention market right now, right? And so 80 to 85%, I took that stat from your Substack because I was blown away. I knew it was very high, the percentage of AI touching the S&P gains, but that's massive, right? So,
I found that out when I was actually doing some research for that article, and was just absolutely like perplexed.
where do you think we're at? Because Bitcoin, we started as a Bitcoin podcast only. We've now moved to the Daily Stack, as I mentioned, because AI is just very interesting and fascinating to me, right? Inherently, then the stock market is kind of the trickle down effect of how you can make your bet and belief in AI continuing, right? We've kind of lost the excitement. You said crypto is boring, right? And so does crypto become unboring again? Where do you think we are at with the life cycle? We had President Trump come out and say he's the Bitcoin president, and that lasted about a day or two, right? So where do you think we are at with the US life cycle, or the life cycle with Bitcoin specifically?
So early, like really painful early. And I think there's a weird optics problem in crypto, because we started as like literally nothing 10 years ago. And so, you've kind of climbed to this peak where finally you get to claim that you're part of an investment thesis. And that's great, but that is like a little hill. And then you ride behind it, there's just a giant mountain that you still have to climb. And I think that's really where Bitcoin is at. When we first started, people would ask us questions as to, whether or not we were sure the regulator knew about us, and, how could this possibly be legal, and that type of thing. And we've come a very long way, such that now most people, especially most institutional managers, can tell you they don't like Bitcoin, but they need to have a reason. They don't get to just say, well, we don't touch them. We don't, we're not going to have an opinion on that. And that was a huge monumental shift, largely ushered in by crypto ETFs. The next leg is going to be, there needs to be a reason for Bitcoin to become a reserve asset, which is actually what its fate is going to likely be. Some kind of reserve asset, probably less peer-to-peer than was originally intended, and more for large governmental transactions. For the US, a large part of the US dollar's, hegemony was solidified via the petrodollar. It's part of why I found the Iranian tolls paid in Bitcoin so fascinating.
Right.
It would be a very effective way to do that, for example. You started to have Bitcoin-denominated petroleum market. Reserves are intended to both bolster currency and be used for exchange. So Bitcoin needs to find its footing there. But there were some interesting tailwinds. So there was a study that came out from the World Gold Council. It said something like 75% of central banks are expecting to reduce their dollar exposure. 45% are expecting to increase their gold exposure. That fragmentation produces some interesting opportunities if Bitcoin can be strategically positioned. And I think that's what comes next for Bitcoin. For crypto more broadly, now you're talking about something else. And that becomes an infrastructure question.
Well, it's always been, I always laugh with my friends. I was like, one day we're going to look back and be like, we followed some person named Satoshi, and we, is this some sort of government plan? Because I'm a Bitcoiner, but my mind's wandered to these conspiracies of, was the NSA behind this and all that fun stuff. But it is interesting, and you take a step back sometimes and you're like, okay, who's behind the closed door? So do you think some of the decentralization is a feature, or do you think it is a bug with Bitcoin not having the centralized CEO or centralized CMO to market? There's every individual that has their own vision for what Bitcoin. Now you bring in layer 2 or yield on top of Bitcoin. and then the OGs start, screaming at you as well. So what's your personal opinion on where this goes? And is it a bug or a feature that it is decentralized?
So first of all, yes, I do see like a significant room to run for Bitcoin's pricing. I think if any of the things we are hoping to accomplish as an industry happen, whether that is acting as a reserve asset, acting as peer-to-peer payments, providing a way to move money around an increasingly fragmented world with a means of exchange that is more convenient than shipping gold bars across the world. Yes, I don't see the current pricing as reflective of what demand would look like in that scenario. And I think that scenario is relatively probable given what we're seeing with the fragmentation of global reserves, activity in peer-to-peer, and sort of increasing financialization around Bitcoin markets. So I think that's an exciting positive. Now, when it comes to decentralization, is that a positive or a negative? I think it's probably a positive. Emphasis on the word probably. It makes it much harder to do things early, right? Centralization is more efficient at most decision making, right? One decision maker is much easier to deal with than a committee. One marketing story is much easier to deal with than, write your own destiny. But the truth is, as we're looking at an increasingly fragmented world, the decentralization of Bitcoin puts us in a really unique position to, quite similar to the internet, provide a place where counterparties who lack trust can meet. And they lack trust in each other's currencies. They lack trust in each other's, business practices. I mean, you can see that already. You can see it on a global basis, right? You can see questions about stability of the UK. What's that going to do to the pound? If the government's unstable, what does that mean for fiat asset? One of my favorite facts I learned recently is fiat and fiat asset actually refers to by decree. Has very little to do with doesn't mean trust. I think people have often translated that as like fiat as in faith or trust. It's actually fiat as in I declare. Which is hilarious because that's actually what governments do, right? They declare money exists and therefore it does. What happens when those governments are less stable? What happens when the US and China aren't getting along, but they still want to do business with each other because we still want to buy something from them and they still want to buy something from us? Mm-hmm. And you're seeing that already. And that's...
Yeah.
Bitcoin is uniquely positioned for that world. It did make it way harder to build and scale, like exponentially harder than a startup. One's making decisions, but it does provide a unique opportunity. And I think that opportunity is how I see, Bitcoin reaching some of these stratospheric, expectations of investors.
I agree. I mean, I'm a podcaster in the Bitcoin space, so obviously I'm very bullish, and I agree that it is a feature. And like you mentioned with gold bars, like that story went away very quickly. Is there actually gold bars in Fort Knox, right? And I remember Elon Musk brought that up, and then we never heard about it again. And so that is a good point too. And Starmer just resigned, I think yesterday or the day before now. And so, yeah, there's destabilization all over, even in the formerly thought of stable countries, right? One question you mentioned just in terms of startups, because $0 to $11 billion with a B is no small feat, right? So you talked about the challenges of Bitcoin growing up and having to go through these different phases. How do you get to $11 billion under management with Bitcoin effectively that a lot of people still weren't getting behind? So that, it's almost like the inflationary where, things used to cost $1. Now they're $5, $10. That $11 billion really is much larger in the sense of people not fully getting behind Bitcoin during the time you were building this. What challenges as a founder did you get into? How did you get to 11 billion? And then ultimately, when did you know? Because it's your baby, basically, right? I couldn't walk away from this. It'd be really sad for me after doing this for several years. How did you come to terms where you said, hey, this is time to move on. I'm on to my next thing.
Yeah. So building companies is really hard. So let's just start with that. Building any company is really hard. And building 21 Shares was really hard. There were a lot of times it was very unclear if this was going to work out. And one of the things I still talk about with my old co-founder is that we worked so hard to raise the first 5 million. Mm-hmm. Like we bled for that first 5 million. It was difficult, great. We launched in the middle of the BCH hash war, and that 5 million that we had fought so hard to get, the next day was 3. That was the beginning. And so it was this constant, how do you build a customer base for a thing that people don't really understand? How do you think about distribution? And ETFs are very much there's a regulatory component where you need to know how to build them and run them effectively and do that. But there's also a very heavy distribution component of how do you explain this to people? So we leaned very heavily education first. We literally, would hand out pamphlets on hey, this is what the Byzantine general's problem is and why you should care about that. That level of education, right? People who just no idea what we're talking about. And it took a really long time. And initially you would be able to convince maybe one family office, maybe one individual. And we would celebrate a, $5,000 check. By the time we were done, we were doing, $100 million days. And that's a very different dynamic. So when did I know it was going to work? I knew it was going to work after we crossed the first 100 million, how well it was going to work. But $100 million is a really big deal in asset management. It's the milestone where platforms can start to add you. Only 3 years and $100 million. And that's the way the entire industry is structured. So once we hit those milestones, I thought it was going to work. I thought the product category was going to work. Whether or not the company was going to work took much longer than that. I think default survival is a state that people undervalue, and it comes much later than you might think, right? Actually being profitable, actually having money in the bank. Mm-hmm. And I say that as the founder of a company that was profitable 6 out of the 8 years I ran it. I think that was always a challenge. Mm-hmm. The decision to let go is equally difficult.
Right.
There came a moment when the market changed, sometime after the US products launched, and became very clear that what had gotten us to here was not going to get us to where we needed to go next, because the investor base was changing. And I think that's caused all sorts of changes across the Bitcoin ecosystem, but the writing was on the wall pretty much 2 weeks after the Bitcoin ETF launches. The market is now shifting. This is not going to be institutions that are actually family offices and hedge funds. This is going to be institutions, i.e. pension plans and endowments. This is a completely different ball game, completely. And the skills required to win at that second ball game are not the same as the ones required to go knock on doors and find your first $100 million. Mm-hmm. Not the same skill set. And so there came a moment of saying, okay, well, am I going to be best in the world at doing that? Do I want to become best in the world at doing that? Is that how I can add most value? Is that going to make me happy? And the answer was I'm never going to be best at them. There are people better than me at it. And you're going to go head to head with some of the biggest names in finance. And the company needed something different. And so that was really the first decision of saying, okay, we're going to bring in some people who can actually handle this problem set and enjoy solving that problem. That's when we brought in a new CEO. And then it was in conversation with him that we realized that, okay, well, what does a supportive cap table look like in this mission? What makes most sense for this company? What's going to give 21 Shares its best shot? Right? And the answer to that was FalconX. Was going to give it a better shot to the dream. And I think it takes a certain amount of humility and a certain amount of self-awareness to come to those conclusions. But it's sort of like sending your kid to college. You're not doing your child any service by home with you. Why? They need to go and do other things and kind of develop on their natural path. And that's very much what this transaction felt like to me. It was finding the right steward and the right partner who is going to be able to accelerate and execute on that vision in a meaningful way and in a better way than the status quo would have been. It would have been great. But the question was, can we do better than that? And yes, I think we can.
Yeah, I was smiling there because I just sent my 2.5-year-old to summer camp. That's a few blocks for me for 3 hours a day, for 3 days a week. And me and my wife looked at each other. We're like, oh my God, this is such a moment, But then I started laughing. I was like, she's a few blocks away. It's for 3 hours.
They the same thing. Right? You make keep her home. Why? Yeah. Go and make friends and have experiences and grow up, right?
Exactly. So this kind of dives into my next question or theme here that I want to talk about, because I was fascinated, and we're watching this in real time, right? With Robinhood. They're tokenizing stocks. They just have their own now Robinhood venture fund that you can get into. the lines are really blurring, not only with Bitcoin and TradFi, but also with private companies and public companies, right? And now the ability, I just listened to another podcast you had prior to this, and you were talking about how those lines are really blurring. What's the difference if now anyone on the street, it's no longer just the ultra wealthy that can go ahead and buy some of these privates or get even into the IPO. Retail traders for years would see a price for the IPO. By the time 9:30 rings, that's 30% higher, and you feel like you missed your shot, right? And then exit liquidity comes, all the early investors, sell off, and the retail gets screwed, right? So what do you see? Do you see this continuing to progress? I'd love to just tap into your brain about how these lines are going to continue to blur. And is there, I feel like we should democratize finance, right? Like give people the autonomy to invest in what they believe in. Make sure there's disclosures and people are somewhat educated. Maybe there's like a digital test people could take to at least prove that they have some knowledge of how these markets work. I would love your take on the private versus public markets. You don't have to deal with the SEC if you're private. You don't have to deal with like the road shows, as much if you're private. So do you think a lot of companies will remain private? We haven't seen a ton of IPOs besides obviously SpaceX, Anthropic, and OpenAI coming up, but and Cerebus. But it feels like it's slowed down. Do you think that will continue to happen?
So I think there are a few pieces to your question, which is, so what we're seeing now is a proto version of 24/7 market. And it's a proto version of what tokenized equities could look like, because you're seeing a couple of things happen at the same time. You're seeing perpetuals on private names, you're seeing prediction markets on private names, and you're seeing actually even regulated ETFs holding illiquid shares. Mm-hmm. That is a really fascinating combination of features such that the line between public and private is starting to soften, right? Because you can place a directional bet. Now, the issue is, and this is where people kind of get stuck, is these things are not the same as owning equity. And in some cases, they're not the same in ways you care about. And in some cases, they're not the same in ways you don't care about. And knowing the difference is important. So one of the things people really do not think about is governance. Mm-hmm. It's have governance, same as crypto has governance. Nobody votes in governance, really. Like participation is historically low. But like one of the things these synthetics do not give you is actual governance rights. They don't, in all cases, in some cases they do, in some they don't give you rights to dividends. They don't necessarily give you rights, like how they're going to behave in certain types of corporate actions is an open question. And it's why it was Hester Pierce who actually put out a tweet clarifying this. So like, they're very pro tokenization. The SEC is going to be pro tokenization of like direct by the issuer. Emphasis on the word issuer, not necessarily company, because they can do that also, that convey similar rights to direct holdings versus some of these abstractions where like the wrappers are more opaque. And so this is, I think, what we're seeing is a transition of like crypto being like, yeah, it doesn't matter. It can be less good than a traditional structure because it's on chain, to, well, now we're actually going to have to provide equivalent quality product. That's a big shift for the industry. Now, I mostly see that as a positive. The interesting thing that when you take all of these pieces together means that the definition of private is going to shift. Today, like private companies still technically have secondaries, right? So you theoretically can sell your participation. The issue is there's just no market for it. Like there's no liquidity for it. There's no market maker. It's much harder. You're negotiating bilateral trades. Like you need to actually go source a buyer if you want to be a seller or vice versa. And oftentimes companies have like transfer restrictions and other things on them. So as you start to move towards a tokenized world, as you start to see these other instruments pop up, that line changes because it would allow people to have at least directional price bets on where large common names are going. I think one of the issues is people misconstrue structural liquidity, i.e. the ability to transfer something, with actual economic liquidity, i.e. the ability to source a buyer for. If you have somebody who wants to buy a token, you can sell it to them. That's much easier from a transfer perspective. Don't have the problem of having to find somebody who wants to buy it. And so while I think there are a number of large names in the pipeline from an IPO perspective, I think you're going to see a lot of other companies continue to stay private because you need to have that type of demand for your shares in order to justify an IPO.
Yeah, I mean, it goes back to the attention economy I was talking about, right? I forget who told me this a while back, but it clicked to me. Yeah, so we had Adrian Morris. I don't know if you follow him on Twitter, but he was the one that like really ingrained it in my head that the stock market is really just attention, or really any asset is the attention economy. And as we're seeing with AI, where anything could be copied and pasted, having the distribution is key right now. And so that's why me and my co-founder are doubling down, trying to build as big of a soapbox as we can here before we copy paste ourselves and have 11 labs do the podcast for us or something along those lines.
What I'll tell you is I'm a bigger fan of like the Michael Burry model, which is you invest in the hated thing, not the loved thing, as long as the fundamentals are good.
Yeah.
Invest in things that are oversold to the point of being despised for some reason. And I would argue a lot of crypto fits into that bucket right now, where they're likely relative to its real impact or value, you're not seeing markets react positively to even positive news in the sector.
Mm-hmm.
Sign.
Yeah, I want to actually tap into that. I didn't have this as a listed question, but alts for a second, just because, Bitcoin is 99.9% of what I talk about when it comes to crypto on this show. So I want to talk about alts real quick, because last summer it was alt season's going to come back. It never came. And it feels like it may never come back. I used to go to crypto conferences all the time. I still do, but more so Bitcoin conferences. When I went to the crypto conferences, I'd look around and I'd think in my head, half these companies are going to be gone next year. And sure enough, the next year, half the companies were gone. VC came in and funded some new companies that sprouted up. But when it came down to it, you're like, who's actually using half of these companies and how are they making money? And, they have to sustain themselves somewhere. Now, we've seen a few of them that have come out, like Chainlink to you, that I think are doing some great work, but I don't think they're getting enough attention, again, going back to the attention economy. Do you foresee altcoins ever having their time in the sun again here?
So I think the issue with altcoins is probably a net positive, actually, but is going to take a little longer to come to fruition. Most of what alts that have real use cases are looking at are financial applications, right? You're typically looking at payments or capital markets in some permutation. Mm-hmm. Other things, but most of those haven't found great product market fit, right? You're looking at the hyperliquids, the chain links, there's a lot of products people are actually using. The issue is that what they're being used for is largely not retail driven narrative sexy. It's mostly like back and middle office functions for financial firms, making them better, making them more effective. Now, that has some pros and cons to it. One, the pros to that are that is an incredibly lucrative space to operate in. Like there are companies that generate billions of dollars in revenue doing that, most of whom no one's ever heard of outside of financial market. But that doesn't make those companies not as valuable. It just makes them not targeted at retail. The likes of, the FISs, the Pfizers, the Broadridges of the world, the MSCIs, the S&P Globals, that is really where a lot of crypto is playing today, right? Like the LSEG, London Stock Exchange Group, Intercontinental Exchange just announced their partnership with OKX. That's where a lot of this stuff lives. And that's not necessarily a retail product. So I think the way in which the market reacts to these names is going to shift, and who the holder base is and who the audience is for those investments is going to shift as a result. Doesn't mean the money, doesn't mean another alt season won't come. It's just likely not going to look exactly the same. Like alts are going corporate. I would actually argue all of crypto is going corporate, right? People put on ties, they go work with banks. That's the whole point, and that's where most of the money is.
Yep.
And I don't see that changing. And so I think that's the main shift. It's not that they're not exciting. It's not that it's not lucrative. It's just targeted at a completely different audience now, which is mostly bankers, brokerages, other financial intermediaries, people who are moving trillions of dollars in turnover. And that main core pillar of financial infrastructure is pulling all of the sort of alternatives market away from sort of the degen profile towards a much more institutional one, which I actually think is healthy for the long-term market, but it does mean right now it feels a little weird if you've been around for a long time. There's a lot less excitement. There's a lot less consumer. There's a lot more like, hey, let's talk about, OKX and how they're going to build a new exchange with, Intercontinental Exchange Group.
Yeah. And it feels like, the price is definitely decoupled from how much these companies are making, like you mentioned. So do you think they need to go, like a Chainlink needs to go public? Do you think these companies will go public? And if not, I don't know how this works. I probably should know, but can Chainlink like do a share buyback, or not shares, but like token buyback? Does that happen?
I don't see any reason why it couldn't. I just don't know why you would, given that like. Also, I would just question what's the difference between Chainlink and its current configuration and Chainlink as a public company. It's falling under the same level of scrutiny. People look at all of its numbers. Its numbers are public. Everything the CEO says moves the price. They're dealing with all of the issues of being public already. It's a market. So the question would then become like, do you see the purpose of a Chainlink NYSE listing? And the answer is, well, you're kind of already seeing them with ETFs.
Yeah.
So I'm not sure what the gap would actually be. I think for all functional purposes, Chainlink as a chain is already public in the same way Bitcoin is. Like, should Bitcoin have an IPO? What would that even look like? It happened the day it was created. And that was sort of my point about tokens, right? The tokenization allows for that structural liquidity, doesn't create markets. The names we're talking about have markets. So if you both have the ability to transact it and have a market, how is that functionally different from being?
What is like a hot take that you may have that divides, that veers off the consensus, where a lot of people believe a certain thing and you're putting your foot in the ground and you have a strong opinion the opposite direction?
Tokenization is probably the one. I think tokenization is much further off than people think. And the infrastructure to actually support it is not ready. And that's something a lot of actually both corporates and blockchain products don't want to deal with, which is right now we are doing a phenomenal job of running POCs for people. Small implementations of, potential test transactions, maybe a few $1 billion. One of the issues, crypto doesn't understand TradFi scale, which is part of the reason why I think people are just way off base in terms of where we're at in the cycle. $1 billion is basically nothing. $1 billion in assets is basically nothing. $1 billion in turnover is definitely. And that's because you're talking about quadrillions of transactions a year with a Q, with average transaction sizes that are not $1, right? They're thousands of dollars. So think about what that turnover really looks like. And none of these solutions that we currently have, and it's not about blockchain throughput, because that's where people always go. It's about all the connective tissue that sits between a settlement rail, books and records, and everything that happens after somebody hits buy. Right? Like the minute you said a buy instruction, like what are the steps that happen between that moment and when you actually receive? Does that look like in TradFi? Can we do that at scale? The answer to most of this right now is no. There's absolutely no tooling to support legacy infrastructure coming in at scale. Their existing tooling does not support these types of interactions. And it touches everything from like a risk model, operations. Because like, for example, if you can settle repo on a Saturday, right? So you can do a collateral movement on a Saturday, which is an example people are really excited about because like, it's going to improve velocity of capital. That's great. But the risk model of the bank is based on only being able to do that 5 days a week. Both ways, because it both means they could be margin called on a Saturday and they can margin call somebody else. So it increases liquidity risk on one side and decreases it on the other. The whole model has to be rewritten. How long does it take to rewrite a risk model? Okay, that's measured in years.
Yeah.
Well, pig, who's dealing with all of this and who's dealing with the integration? And I think that's just a piece of the market that because it's not sexy, going back to our whole like not sexy is where most of the really important rubber hits the road. This is nowhere near ready for prime time. And we're off telling everybody like we're going to tokenize the world and no one is solving these connectivity issues yet.
No, it's interesting. You actually went right after Jeff Walton, who is a friend of the pod as well, on your recent interview, but he's really focused. He was on reinsurance. So he was all about like risk and focused on that. I'm also, as much as I love day trading, I like that at 4:00 and then at 8:00, everything kind of closes down, at least on the traditional markets. Like it's just too crazy. And it's on a very dumbed down version, it's like almost like fantasy football, where if you don't have the waiver wire, it's whoever the crackhead in your group is basically that stays up till 4 a.m. and can pick up every player. So it's the same concept because things will happen very quickly at night and everyone's sleeping, things could happen, so I like the break. I think people need to take a step back and go a little bit more analog and touch grass and have some time with their family and friends and relax a bit. But yeah, I guess that kind of leads me to my next question. I know AI, you've talked about a little bit in your Substack. Obviously, you can't walk down the street without someone talking about it today. Is this a bubble, in your opinion?
Mm. Yes, I think so. And I say that really cautiously. I think it is likely, there's likely some overvaluation because everyone is really excited about something. And the minute that happens,
Yeah.
markets aren't entirely rational. Markets are actually very emotional. And I see that as something that's definitely happening. The thing that gives me pause is that a lot of this money that's being deployed is building physical infrastructure. And physical infrastructure does have value, regardless of what else happens. I think you're building things in the physical world, and I think that is an interesting shift. And we're seeing demand for models continue to grow. I think the token maxing stuff that's happening right now, which is inflating some of the demand, is going to change. I don't think of leaderboards in the way you do now. I think it's going to be back to measuring impact, not measuring utility of tools. And so I think you're going to see some level of right sizing of demand. So like really is useful here. But I do think AI is going to lead to an explosion of productivity, not similar to the internet or the industrial revolution. And so it's likely overvalued for where it is right now. And I could easily see a correction come to the market. But I believe that in the long run, will likely live up to the hype. Depends on what time frame you choose to take. I think we're likely a little overheated right now on the AI side. Okay. In the long run, it probably is going to deliver on a lot of this value.
You brought up a good point too around like the consensus. And Chris Camello, this is my 100th time mentioning this podcast, but he was talking about that he's like, I don't want to be in a stock that everyone's loving and everyone's talking about. That means that the delta there is gone, right? So that kind of aligns with your thinking. And I agree. I think it's maybe a little overheated, but long term, I think it's here to stay. I think it is the industrial revolution. Like I just see it firsthand, the output that I can do now with AI. I used to send maybe 15 emails, 20 emails in a day, and now I can just go crazy with it. And they're all the best version of me, but you can start to tell, right? Like it first was the M dashes. Then you could say like, okay, that's clearly AI written still. But those lines I think will blur too over time. And I think it's going to be in this world where maybe blockchain is the savior of telling the truth of what is the real version of something versus something that is a copy.
The other issue is the current version of AI doesn't think. The current version of AI pattern matches.
Yep.
So the difference between that is it cannot really come up with an original thought. So the problem is that you are going to have the median person get better ideas and better thoughts because it's feeding off of, right? Like the average percent of people are going to be less capable of producing that quality. I think it's going to bring basically everybody up to the average. What it's not going to do is replace truly disruptive thinking because it's not capable of doing that. It's capable of pattern matching. It's capable of action. It's capable of generating content really effectively. But that's all based on information that's been produced by somebody else. And I think that's the piece that to me, like at least the current version, and maybe there will be versions of AI that are capable of doing that, but I don't think it's going to be an LLM.
Yeah.
You're going to see other forms of model come out that can actually reason and be more creative, not just, study an entire artist's body of work and create a song that sounds kind of like it and therefore can go viral. That's not the same thing as, well, then who's going to create the next body of work? Are we just going to stagnate and listen to the exact same music we have today for the rest of history? Because if you model on only what existed in 1775, it would sound absolutely nothing like music today. And it wouldn't be able to get there. And that's where I think the AI story, like there's something still missing to it in my mind.
You think we'll get to AGI, like true AGI eventually?
I think any sufficiently advanced technology is indistinguishable from.
Yeah.
And while it may appear to be truly sentient, again, take somebody from 1775 and show them an airplane and ask them why it is that's flying. I think we're reaching a place of technology specification that will make it very difficult for the layperson, myself included, to distinguish between those things. I don't think that means all of humanity is useless.
Basically, it takes all the smartest people in the world and puts it in a little box for you. But to your point, even my wife, just because she doesn't use it nearly as often as I do, we could have the same task. Like, you could give us both a task and mine would come out significantly more in depth. And this is just because she's a teacher. She's busy all day. She doesn't have time, 20 hours a day to vibe code and to do everything that I'm doing. But there's levels to this as well. And I'm maybe here and you're probably even higher and there's someone higher than you, right? And so there are still like a 10x dev maybe better at using a product than we can today. And it is kind of the puppeteer, if you will.
Or even like all this thing can do for you is take the smartest people in the room and put them in a box and deliver it to you. It doesn't replace the smartest people in the room because all it can do is regurgitate that information.
Yeah.
All it's doing, right? It's just 10x or 100x better at that, right? It's 100x better at looking at things at Stack Overflow than an average engineer is. If there's actually a novel problem, is it going to be able to solve it? Right. Maybe. With engineering, probably, because that's pattern recognition and math. But in terms of like developing something entirely new, that's why I always go back to art, right? Like techno, radically new versus classical music, right? Classical, there were multiple waves of like entire pattern breaks historically in the arts and in technology and in medicine. AI can only look at what's available on the internet, or what's available in a private data set. Like, does it know what's going on in the Marianas Trench? Because we don't.
Yeah.
How is it going to predict that?
Yeah.
And that's where the limit is. Now, to most people, they don't live at that limit, so it's irrelevant. Mm-hmm. People who are interested in pursuing more and will enable more people to spend time on those types of frontier problems as AI soaks up most of the other kind of intellectual labor that we need to do. And that's interesting because that could lead to, functionally, a new enlightenment.
It's amazing times we live in. It's I was just visualizing this glass ceiling of anyone that's anyone thought of hits that glass ceiling. But you're right. Like there are new net. I've been using Sono quite a bit, which is amazing to write these songs and create it. But even if I put jazz with techno, those have already existed, right? I'm just meshing them together. There isn't a net new anything, which is a great point. I call it we're in the age of the revenge of the nerds. This is like the revenge of the salespeople. Now, if you're curious, AI is extremely powerful because you can start just like the knowledge you just bring in front of your face so quickly. It's incredible.
For use case is right now, and it's really basic, but it really impacts my life, is I have Claude read through all of the newsletters I receive and create summaries. So now instead of being subscribed to 100 newsletters, of which I can maybe read half in a week, I can now actually get the best of all of them effectively. And then I, fully read the ones that are interesting, but it at least tells me what's going on in all of these different areas of the world that I'm interested in. That is an immense amount of knowledge I would be completely incapable of absorbing independently.
Yeah. It is fascinating. I do want to, since it's 11, so I'll just wrap this up with one more question. So you said, like, you don't think everyone's going to lose their jobs. But as, I think of it in the same way as like weaponry, like, 100 years ago, maybe people were using muskets, but now the people that were using muskets, are using these massive tanks or missiles that can fly. Great. The floor keeps rising, right? In terms of like the damage things could happen. So where I'm going with this is, I wrote a letter to Seth Godin one time, who was a writer that I loved to read. And I was like, I came up with this theory of the toll booth effect. And the toll booth effect was my first as a kid seeing, okay, this is automated now. So the factory workers, robotics is coming in, maybe we're in the top 1% of thinkers. We're surrounded by tech constantly. The average Joe living in Arkansas today, that's a factory worker. Do those jobs go away? And what do those folks end up doing? Is there a UBI down the road coming or?
So I think there's a couple of things. The future's already here. It's just not evenly distributed. And so if you zoom out on this, like the issue is that, yes, you can see that in some places the future is already coming and it's going to look like robots and self-driving cars. And what are we going to do about trucking? And yes, but it's not evenly distributed and that it's not going to arrive everywhere at once. And it will likely be a very lengthy transition. I was talking as recently as like 2 weeks ago, was mentioning that, one of the NASA manager was currently retiring their mainframe, right? Like people are still running on mainframes. Yeah. The real thing, right? Like think about antiquated technology that's buried in things like Bank of America, who need to maintain special teams to maintain certain types of technology. Like, yes, but technology transitions are much more complicated, much more expensive, and much slower than people think. Not, in 2 years, the, U.S. economy is going to get hit by a truck in the shape of AI. It's likely a transition that's going to take 10 to 20. And over that time, there will be an opportunity to adapt and change economic systems in response to this. One of my, the best example, I'm Italian, I have a house in Italy, I grew up there. COVID is what really pushed people towards Amazon and delivery. Food, groceries, anything. Like Uber Eats wasn't really a thing, Deliveroo, like the popularity of those use cases and the presence that those had in colloquial life really exploded with COVID. Compare that to America, where we have been doing that for a decade, and compare that to San Francisco, where when, 20 years ago, that was starting to already be a thing, right? Like when I was in college, that was already something people were.
Yeah.
That's what I mean by the future is here, but it's not evenly distributed. Like this is going to be depending on where you sit, it will arrive faster or slower. And there will likely be an extended adaptation period. And so my hope is that we won't need a UBI. My hope is that we will be able to actually repurpose all of this talent towards doing other things, doing more interesting things, improving quality of life, improving healthcare systems and care facilities and education, and we can actually repurpose. And I think that's my hope in all of this. And it's what I see with other technologies as they've rolled through. Mm-hmm. Just much slower than people expect. Not the technology innovation. We've been able to have Amazon deliver books for decades.
Yeah.
But the adoption of that is a completely separate and unrelated thing.
And I think one thing I've noticed about folks in crypto are the curious. That's kind of the common trademark, is people don't necessarily just accept the status quo. They ask why a lot of the times, right? And they're asking questions, and that's how we grow as humanity. And this conversation got a lot deeper than I initially thought. So this is phenomenal, Ophelia. We'll have to definitely bring you back. Where can people find you? You got your Substack. That's phenomenal. Definitely. And I'm not just saying this because you're on here. I read a few of them and they're really great.
Thank you.
So Substack, on Twitter, we got your Twitter handle below, or X handle below, with Ophelia D. Snyder. What's next for you? And where else can people reach you?
Yeah. Twitter, Substack, Instagram. Next for me is I'm writing a lot. I'm thinking a lot about the industry. And I think those two things go hand in hand as I think about what there is that I would like to build and contribute to. So actually the Substack is in part an exploration of what I'm seeing in the world as I think about what I want to do next and what I want to build.
I love it. Well, you'll write your next journey on your own.
Yeah.
Thank you so much, Ophelia. Give a big shout out to Lauren for putting this together, and hope to see you again. This was fantastic.
Cause we pop 'em like overheated vodka. C3, okay, a millionaire.